This is the December 3rd, 2018 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman for another fast-paced tour of the global financial markets. A huge week for financial headlines and deep implications for 2019 strategy. So let's get started. What the heck is that? That's the Dow going up over 600 points. And what started it about right here during the day? Well, that was Federal Reserve Chairman Jerome Powell, after getting excoriated by CNBC's Jim Cramer and President Trump for his relentless path on raising rates. Well, he said, you know what, we're pretty well near neutral, meaning we're nearly done. So the December 19th increase, maybe one more, could be it for the Federal Reserve tightening cycle. And that's the impact that you see right here. Notice the Dow still range bound. So if we want a weather reading going forward, it's a range bound market. And we're going to cover the solutions in this weekend's program at NetWorthRadio.com. What's this? This is a bubble popped. Now, we're going to dive back into Jerome Powell's logic. His tightening cycle crushed the emerging market currencies and emerging market equity, including China, which was down over 20%. So look at this. This is the technology index. There's your relentless rally, which lasted a huge amount of time and peaked in May of this year. And since that time, this index has experienced declines, in part that totaled over 20%. That was the technology sector bubble being taken out by the Federal Reserve tightening cycle, along with overvaluation. What's next? Well, here we may have an indication that inflation is in fact dead. And I'm going to cite two reports. One's on the screen. This is gasoline, and this is the consumer price index. We'll call this inflation. We're going back right here to 2013. Notice gasoline came down in 2014, and what happened to CPI? It came down with it, but it came down after, okay? What happened here? Gasoline came down to $1.42 per wholesale gallon. That's $1.90 at most gas stations. But here we see CPI running a little bounce. If this is the leading indicator, it may be that inflation is dead. One other report highlighted this week. Plano makes the cover of the Wall Street Journal, Plano, Texas, a boomtown by any measure. They cited oversupply, builder incentives, and price cuts, combined with the fact that new home sales were down 9%. Wow. That's a huge decrease, and it means that the housing boom may be over. We cited a few months ago that rent levels starting in Irving were actually down. You have an absorption cycle for multifamily, and that means inflation in the housing sector has ended based upon the Case-Shiller Home Price Index being at zero appreciation in the most recent month. No inflation pressure. Where's the incentive to go higher on short-term interest rates? That was the big message. That inflection point highlights two asset classes, and we're going to delve a little bit into the energy infrastructure markets. This is natural gas. $4.56 per million BTUs at the end of this measure. Notice that spike. Yes, it's cold out there, and you can see wintertime, it's not uncommon to have that spike, but this is pretty dramatic because it's the highest price of natural gas since 2013, early 2014. What are we experiencing? Liquid natural gas exportation is expected to remove the excess of the gas bubble. That means that in energy infrastructure, the pipelines carrying that gas are going to get more toll booth fees, and that's more cash flow for energy infrastructure investors. The oil pipelines are full, evidenced by this right here, oil falling briefly below $50 in this most recent chart, which goes back 12 years, by the way. You can see the decline from 140 down to something in the 30s here. We saw 27 a barrel at the beginning of 2016. What does this mean? Well, the oil pipelines are full because of Permian production, meaning that their toll booth fee is rising when they go in for contract negotiations. The pipeline index, even with the decline in oil prices, is capable of delivering superior cash flow from oil and natural gas pipelines, as well as appreciation. The other category we're going to highlight, now that Jerome Powell has said he's near the end of his tightening cycle, is global high yield, where yields in some of the bond funds are common above 7%, not without price risk and not without appreciation potential. Go to NetWorthRadio.com for all of the details in this weekend's strategy briefing with Alex Tolene, head of trading, and yours truly, Spencer McGowan, your financial weatherman. We'll be back next week with the best in financial news. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.